Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so we have a reignition of the feud between Trump and Elon Musk. Again, Elon Musk overnight yesterday attacking this new mega bill, the spending tax bill, and talking about how horrendous it's going to be in terms of adding debt to the U.S. Ultimately, Trump fighting back and ripping him on social media. And again, we are seeing the markets down on the back of that. Now, listen, in all fairness, the stock market is up or has been up for multiple days in a row. I think the NASDAQ up 6 days in a row, which is bringing us into a time count. So one thing to kind of keep in mind there, time counts in technical analysis, very important. They can be pivot points after those 6 up days in a row. But the point here is Tesla stock is trading down. It's trading into a wedge pattern, which I'll show you in just 1 second. And if it breaks that wedge pattern, it could be headed down sharply, even below the current levels. All right, before we get into that, I did want to just jump over to this screen here, and I just want to show you guys a little bit about what is going on here. So let's take a quick look at the homepage here at Verified Investing. And one of the things to go over here, folks, is just a reminder. These are articles that my traders and I write every single day. They're short, right? So the idea here is if you click on the Decker article right here, it's simply just an outline of technical analysis, short, and the chart is right there. You can see, again, simple trading opportunities that are free. Everything on this homepage is free, folks, for you guys, because you guys are rock stars and we do appreciate you. All right, so again, if we can add freebies into the mix here, of course we will do that. Now, as we scroll down, the reason why I wanted to bring this up today is because of this. So insider selling continues to be unbelievably epic. Let's click on that and view it in a big way. So this, again, is the last 60 days of insider buying and selling. And what do we see? Is there a lot of green? No. There's a ton of red. And when I talk about markets, right, if you're thinking about psychologically, right, so again, what do the insiders want to do? They want to get you to a point where you are like, holy cow, I have to be long this market, put all my money in the market. Meanwhile, you have to look at the underbelly. What are they doing? They're unloading at unprecedented levels. And that, to me, my friends out there, again, I always try to show you guys something that is going to make you say, and this, to me, is something major. All right, if the economy was going to be perfect, if everything was going to be great going forward, why are these insiders dumping so much stock out there? Something is amiss. Be careful with the market being at all-time highs. All right, as we scroll down here, as always, folks, you have all these weekly articles from me on major levels. You have major data that we put up as well that you can go through, commodities, currency charts. By the way, I showed you these currency charts yesterday, which are pretty remarkable. If we take a look here, there's that head and shoulders pattern on the dollar yen, which tells us it's going to likely break and go much, much lower. And remember what that means. It means the dollar is going to weaken significantly against the yen. Now, lastly, I just want to go over the Fed Watch tool here. The Fed Watch tool is now implying that we have 3 rate cuts in the remainder of the year. So far, nothing here in July. So that's later this month. Today, the first day of the new quarter. So no cut in July. A cut is very likely in September, very likely in October, and then in the December meeting, it is favoring that as well. And obviously subject to change if we see a big uptick in the, basically a big uptick in the inflation, or if the economy stays relatively strong. All right, so really when it comes down to it, my point of showing you this stuff is that, number one, we're expecting 3 rate cuts, but number two, that insider selling is really problematic. That to me is these people. These are CEOs, these are CFOs. They have the inside view of how their businesses are going. And what are we seeing? We're seeing them unloading stock left and right. And that, again, to me, is a classic warning sign. All right, into the charts we go. The S&P futures are slightly lower today. It's not a big sell-off by any stretch, but as we can see overnight, as kind of the fear of a Trump Elon feud reigniting comes in, the futures have traded lower. Like I said, if we go to the S&P daily chart, we can see again, guys, that we kissed the underbelly again of that upsloping former trend line that we broke. So it was holding support, and I'll show you guys this very clearly. Support here, here, and here, and one more time here. And then what did we see? We saw it break right there. That was right at that cycle turn date. So that break occurred. And then we've made a retrace to what we would call the scene of the crime, which usually you get the rejection off of. So again, as a teacher, which is what I love doing for you guys, is showing you this stuff. In general, you would expect after you retrace into the scene of the crime, a rejection, and the next big move comes in. So we'll watch to see how that comes. Does it come or follow through? Do we see that selling pressure ignite? All right, markets again, if we look at for the quarter. So again, at the beginning of the quarter, we started out, let's see, where was the beginning of the quarter here? We started the quarter right here. Early April saw the big sell-off, and then from the low on the S&P 500, we have rallied 28% off of that low. And again, that's an incredible reversal. In fact, for the quarter, it was the best quarter since, you know when? Since go back right here. Okay, since the COVID drop, the quarter after the COVID drop, right here. Now, listen, in all fairness, following that, we continued to rally up and we have basically nonstop. But the point being is that these sharp drops, they have conditioned investors to buy with both hands the markets off of those. So this V bottom during COVID, March 2020, where we kind of went into April, May, and June, right? That recovery is very similar if we go to the current period right here. Down move, up move right there on the charts. Again, so we'll have to watch and see, but we should see a rejection off of this level. NASDAQ, same thing. This one has not gotten to the scene of the crime. So does that mean there could be a little bit more upside in the NASDAQ? It is a possibility. Needless to say, the NASDAQ 100, 50% of the NASDAQ 100 is made up by the mega caps. The dollar just continues to weaken, guys. And again, I think I talked about this a little bit yesterday, but it's so important to understand is that as the dollar weakens, it has inflationary pressures. Now, a little weakening in the dollar is not a big deal, but if the dollar continues to weaken significantly, and the dollar had its worst quarter in a really long time, I think going back to 1970s, the 1970s. So let me say that again. The dollar lost the most value compared to other currencies since the 1970s in this latest quarter. Now, again, what do we know about the 1970s? There was high inflation and kind of stagflation. Well, guess what? We're now seeing that same sort of thing bubble up with inflation creeping up and the economy slowly weakening. Granted, it's not falling off a cliff, but it is slowly weakening. So just a few things to look and keep an eye on that front. But if we look at the dollar again, 2, 4, 6, 7 down days in a row, should be getting close to a bounce. The way I look at this chart is you've broken and confirmed below this level here that we were watching. So what's the probability here? At some point, we retrace into the scene of the crime, and then you get your next leg down in the dollar. But to me, if you look at that Euro USD chart or the dollar yen chart, both are signaling that both of those foreign currencies are going to strengthen significantly against the dollar in the coming months and years. 10-year yield getting a little bit of a bounce after falling more today. It is coming back up to about 4.23%. I still think eventually it gets down to this level, but right now, again, it's basically flat on the day. Now, Tesla, let's talk Tesla here. Tesla is currently trading around $300 a share, down almost 6%. And again, this is purely because of the reignition of the feud between Elon and Trump. Again, Elon ripping the bill, Trump ripping back. And again, who knows where this all ends? Elon saying that any Congress player or politician who ran on cutting spending that votes for this bill, he will literally fund their opponents to get them out. He will primary against them to get them out. So obviously that's going to ruffle Trump's feathers, who wants this bill to get passed, which right now independent sources have said it will add about $3.5 trillion to the deficit. All right, now on a technical basis, what do we know about this chart? Well, what we know is we've been stuck on this in a wedge pattern. High pivot, high pivot, high pivot, and then we have our low pivots right here, here, and here. Now, where is the current price? I have a dotted line right here. We are currently on this support level. If this breaks today on Tesla, it opens the door for not just a move down to this support around 271 to 272, but possibly even retesting this low around 220 to 215. So this is what we watch for on wedge patterns. Remember, the way wedge patterns work is they bounce in a tighter and tighter range, right? Until one side breaks. And when that side breaks, it's like a coiled spring. This is a spring that is tightening tighter and tighter and tighter. And whenever that breaks, especially if it's tighter and tighter, then it's winding tighter and tighter, you get a big move in that direction. So the reason why I'm saying to watch Tesla here at this 300, 297 area right here is that if it does break below and closes below today, the close below is key. A pierce is fine if it recaptures it by the end of the day, but a close below, you watch out below. If it bounces and comes up here and breaks, then you say, okay, now this is going to rip to the upside significantly. The point again is whichever way the wedge breaks, you're likely to get a major move. Now, flipping over to Robinhood. Robinhood had news yesterday that they're going to offer tokenized trading in the EU, the European Union, in Europe. And so that stock took off yesterday. It is extremely extended. If you look at the RSIs, you have negative weekly and monthly RSI divergence. The stock was up in the pre-market. It still is up, but only slightly. I still think if you go to your daily chart here, folks, this is a 200 and basically 15% move in a straight line. This should have a correction to this target price down here. Now, you might say, holy cow, back to $65. I mean, there's a gap fill at 68, so maybe 68. But the point being is that in technical analysis, when you break above a level, so again, here's resistance, and bullish consolidation, yields breakout. When you break out, there's a tendency, whether it's now or in a few months, for price to want to retest the former resistance, now support. So if you're someone that's on the sideline saying, oh man, should I buy Robinhood up here? The answer is in general, no. Like again, you never know specifically if this is the one that's just going to keep going. It very well could. But what I would say, at least as me as a disciplined trader, you look for the pullback and then you buy the retrace to the scene of the crime. That's a great opportunity. If it ever comes back down here, there should be a significant bounce off that. That would be about a 33% decline on the stock from current levels. Coinbase is also trading lower today. I wanted to show this chart because I think it's a great chart to show the convergence of two trend lines. Notice this right here. Low pivot, low pivot, low pivot, low pivot, and even right there a low pivot. So that was support. It broke down. And by the way, look, it retraces to the scene of the crime. We were just talking about that with Robinhood. So see how this line was support. It broke, comes back to that line. Was that a good resistance level? Oh my gosh, yes. It went from 350 back to 145 bucks per share. Now it came up to that level again, which by the way, second hits are no longer quite as good, but it has this new pivot high as resistance, and lo and behold, price pierced it briefly, got even closed above, then came right back in, down and down today again. So again, classic chart setup. Another one here, guys, is RCL, Royal Caribbean. One of my favorite chart setups here for a pullback. This is, again, what we would call a retrace to the scene of the crime setup. This is, again, support, 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 and then broke, bear flag consolidation, breaks down. Where is it? Back to that level. What should we assume will happen off of this? Rejection and it should come in. So great opportunity there, guys. Again, amazing move on Royal Caribbean. And by the way, does this mean that I don't like Royal Caribbean or I don't like Robinhood or I don't like Coinbase? Heck no. I couldn't care less, right? I mean, that's the key is that as a trader, you don't care if you're trading Royal Caribbean or if you're trading rocks on the side of the road or whatever it is. You could be trading honeydew melons or cherries or whatever it is. The point is, it's all about the chart. And as soon as we subtract ourselves from our emotional attachments, we will end up making the right decision a majority of the time. Not all the time. There's no all the time in trading, just like there's no all the time in life. But the point is, you try to play the probabilities. And when something works over and over again, you say, okay, listen, regardless of my feelings towards this stock or this commodity or this crypto, the odds favor a pullback here. Now, it could be a buying opportunity at some point down the line, which is fine. Then I say, okay, well, I go long, right? So short, long. Great example of this, by the way, is what I did on oil, right? So if we flip back to the charts, let's go right into oil here, and we'll get to Bitcoin. Don't worry for all of you guys that are always panicked if I don't go right to Bitcoin. But again, you have this scenario here, right? So where was I short on oil? Right up here, right? Major high trend line, classic downsloping trend line. It pulled back, got even a secondary test, and then look at the collapse. And then what did I do? I flipped my short into a long right here, and it is going up a little bit. I've been a little concerned that we haven't seen a big enough pop here. It's bear flagging a little bit, but I'm in the money on my trade at this point by a little bit. And again, the idea is it doesn't matter how I feel about oil. I frankly couldn't care about oil. I couldn't care about any stock out there. There's no stock that I have a connection to. They are trading vehicles to make me and my family money. And that's really the right way to view it. No stock or commodity is going to say, oh, I really like that little Johnny, so let me make sure that I do the right thing for him and go in the right direction when he wants me to go in the right direction. Right? A stock doesn't think. It doesn't think. It is a vehicle that everyone else is trading. And so you have to treat it as such. You shouldn't have this weird emotional attachment to any particular asset. They are there to make us money, and therefore we need to trade them appropriately. All right, but in any case, oil looking good here, guys. A little bit of a bounce today. I'm looking for a break above this high here of 66.40. If oil can get above there in the next couple days, before the time count, then it should move back up to about 67 to 68. Like I said, I'm not looking for a huge home run on this. This is just a short-term quick swing trade bounce on oil. All right, we'll get into Bitcoin real quick here, guys. Bitcoin is slowly coming in. High, lower high, lower high, flat bottom right here. This essentially is creating what we would refer to as a little bit of a wedge pattern. It's getting rejected. It still could come up and break out. Be aware that we've now hit this line 1, 2, 3 times. The methodology that I teach, which again, Winning Trader Series on sale through July 4th, and that'll be it. But ultimately, it says that the fourth hit, there starts to be a 50-50 or slight favoring to a breakout. So if it can not sell off down here, but instead come in like this and then curl up, the odds start to favor a move up to 113. Now, the other side of the coin, though, this is the tricky thing, is that how many times have we hit the lower line? 1, 2, 3. So if you come down here, you might get a small bounce, but then odds favor a breakdown. So we're really coming to that where Bitcoin should be ready to break one way or the other at the next test. The question is which line will be tested, and that's going to be the big question here. Again, a breakdown takes us to the 95 to 93 zone. A breakout to 113 would be the upside. All right, quickly on gold, guys. Gold getting a great bounce. I'm very impressed with gold, and I'm going to tell you why. It closed below the line. Now, it didn't confirm, and remember, the confirmation signal is the make or break for if it's a firm breakdown, meaning odds of 80% that it's a real breakdown or not, or it's a fake out. So it didn't confirm. So it was an open-ended question, and it recaptured, and then look, boom, right to the upside. So that's impressive on gold for now. Now, listen, unless gold takes out this line, it's just going back in its wedge pattern, right? That's really all it's doing at this point, is kind of reigniting into its wedge pattern of consolidation. Other names like silver, it was up more. Look at this, downsloping line right to the high end, pulling back there. This is still a bullish pattern, so be aware of that. So again, still bull flagging. Again, ideally, I'd like one more pullback here right into this zone, and then I buy it there myself. And then lastly, natural gas. After a big sell yesterday, it is continuing down. I've isolated my level down where I am looking to potentially go long again on nat gas. It would be right in this zone right here. It would have to come straight into that level over the next, let's say, 2 to 3 days. But then that level should yield another bounce back. Now, I don't think it's going back here, frankly. I think you're just going to get a bounce back to like here, maybe the low right in this area right here where all these low pivots are. But ultimately, again, that would be the setup here. Okay. All right, guys. So listen, at 10 o'clock today, we get ISM and we get JOLTS data, job openings. So there is some economic data. Jerome Powell is speaking at 9:30. Now, he hasn't really said anything. He's keeping everything close to his chest. But just be aware that Jerome Powell speaks at 9:30, at 10 o'clock, JOLTS and ISM data. And then obviously later in the day, we just got to see if the feud between Musk and Trump continues. If you're day trading with me, we got to be ready for some intraday volatility. If you remember the last time they had their feud, the volatility intraday was pretty wild as well, which for us as traders is awesome, right? I mean, again, we trade, we thrive off volatility. That's what we need as day traders to trade. All right, you guys have a great rest of your day. Thank you guys so much for tuning in. Don't forget, courses through July 4th, 55 to 50% off. Go take advantage, learn some things. It'll blow your mind. Have a good one. Take care.